Hello again, everyone. This is Ken Kibler, Director of Training and Client Support for eTruckBiz. We're about a minute shy of the top of the hour, and the attendee list is rapidly growing. So we're going to sit tight here for a minute or so and let that attendee list grow. Please sit tight, and we'll be back with you. All right. Hello again, everyone. This is Ken Kibler, Director of Training and Client Support for eTruckBiz. We're going to continue our Tuesday sessions here. I want to thank everybody for joining us. And as always, if you have any questions, please put them in the chat or the Q&A. We're going to cover some of our normal topics today, as well as really talking about pulling that profit out of your operation. So with further ado, we'll turn this over to Jeff Walzak.
Okay, let's see here if we can get this going. Here we go. As always, we need to make sure that you know eTruckBiz is not endorsed, sponsored, approved, or otherwise affiliated with FedEx Corporation. So we always look at the volume trends, and there you go. Pickup stops hanging up there. That's pretty good. Way above trend, actually. And then the packages look good, way above trend. And oh boy, pickup stops per dispatch. What's that doing down there?
Wow.
How about on the delivery side? What's going on? So can we make some accountants happy? Look at that big dip back there at 4th of July, but there you go. Volume's hanging up there above trend. That's good. Packages, that's good. They're up there, trending the right way. Let's look at our productivity. Remember, in your contract, there's the word proficiency. One of these days we'll show that to you. Or it's going to be in your contract, we'll put it that way. So are we getting the handle on the productivity issues? So, whoa, routes dispatched, still hanging up there. Stops per dispatch. Nope, it's going the wrong way.
Ouch. That's a killer. That is going to be a financial killer for you. So this is a time where you should have some vacations that you got to plan for. At the same time, that means you can move some work onto some of your existing drivers and gives you a chance to push this number up. So definitely encourage you. I mean, basically, we've gone from a peak of almost 104. It looks like down to almost 4 stops per dispatch. At $4 per stop, that's $16 per dispatch.
So there's that, and we always ask the question, how many stops per dispatch do you have out there today? You know. If not, what's it costing you not to know? So as we said last week, and we're gonna say it every week probably now until it happens, we'll be seeing you down in Orlando, October 1st through 4th. So we want to do a poll today. We want to know, and let's see if we can figure this one. There you go. Look at that. Can you tell us, are you planning on attending the Orlando Summit? Say yes, no, undecided. And if yes, and if we were to, I believe it's going to be the Wednesday of week, of that week. I think it's the Wednesday. I think Mondays. Oh no, I got my days. So the 1st is a Tuesday, I think. Can you look that up, Ken? Because I don't know.
Yep, let me check.
I think the 1st is a Tuesday. I'm not sure, but I think Wednesday there's some sort of FedEx event until 6. I think it's until 6, and if that's the case, we're going to have some sort of for our eTruck faithful, or those who want to be faithful, whatever you want to call it. We're going to have some sort of event, probably just mainly for the eTruck folks, might be invitation only. And if that's the case, and if you're interested in showing up there, please answer yes to question number 2 there.
The 1st is a Tuesday. I should know
Is
that.
it a
It's my
Tuesday?
anniversary.
Duh. So that's interesting. About half are showing up. Half said no way. Another third are undecided-ish. Well, that's pretty cool. Okay. All right. Okay. Back in action here.
There you go.
So there's some news out there, a little bit of news out there. This was interesting from CNBC. Retailers shift their thinking on costly last mile delivery as consumer need for speed raises costs. Well, I don't know if you guys remember, maybe some of you do, back when Amazon, everybody started telling everybody, announcing, hey, we're going to deliver same day stuff from our warehouses, right? It was all about same day from the store. How in the world can you buy a box of toothpicks and have that delivered same day and have that somehow be profitable? I don't know. Toothpicks cost $1. Well, today toothpicks cost $7 and it costs you $15 to get it to your house. And how does that make sense? Well, anyway, here you go. FedEx and UPS are facing increased competition as last mile delivery providers, according to an Alex Partners survey, with UPS the one losing ground to date. Retailers are focusing more on cost as satisfying the delivery speed consumers have become accustomed to demanding, such as same day, hasn't paid off financially. I don't know, Ken, where would you have heard that before?
Let me see. And I don't know if you just saw UPS announced their peak surcharge rates. I don't know if you have that included in
Oh,
the or
no,
not.
I didn't
So
see that.
that the biggest increase ever, and Ms. Tomei says that they'll be handling more packages in their network than ever before.
Well, that's going to be a long way to go then.
Yep.
They're already down a certain percent. Okay. Well, we'll see. Anyway, consumer need for speed in package delivery, which has reached its apex with same-day shipping, has placed retailers in a tough spot when it comes to managing transportation costs. The result is increased competition among shippers for retail volume in a market dominated by FedEx and UPS, according to a new survey. Retail executives surveyed say as more, especially younger consumers demand same-day delivery, the financial payoff isn't there. Basically, we said that. So shippers are facing their own cost pressures. carriers have experienced meaningful inflation in wages, equipment, repair and maintenance, insurance, fuel, tires, real estate, healthcare costs, and more. Said some guy, charges something. Those costs are offset by future rate increases, which you might have just said there again. There's also a macro supply and demand equation to consider as e-commerce growth outstrips retail growth. So the guy said that the recent UPS contract is a good example of wage inflation. Who'd have thunk that?
Huh, imagine that.
All right. Well, meanwhile, getting back to our financial house here. So we've been doing a good bit of analysis on the financial impact of time definite. So everybody knows this is coming. How fast is it coming? How much delayed is it? There's enough data out there now from clients of ours that are actually doing this, and there's actually 2 or 3 different versions of what's going on out there, that we're finally getting to see we can, analyze some of the financial impact of what's going on out there. So the good news is that in general, it's very positive. So a lot of folks, there's a lot of talk and whatnot, and you should know that when you get time definite deliveries, it does several things for you. It increases your density, which should lower your per unit cost. It increases your revenue, right? Hopefully, those 2 things improve your margins, right? Now, the way it's currently structured, Carrie's on here, she can attest to this, Ken can attest to this, everybody can attest to this. If you can hit service goals, which means adjusting to the new operational complexity, it's a pretty good thing, right? Anyways, just like Carrie has done quite a few negotiations now related to what are being called optimized CSAs. So this seems to be the new buzz phrase. Our friends in the panhandle of Florida this last Saturday, I think, stood up to the new optimized CSA, their new optimized CSAs. Folks in the Carolinas, some of you are next. And surprisingly, it's interesting to discover something that many CSPs are not aware of how their CSA is supposed to be performing financially. So you know that you have to hit 98.5, 99 service, whatever. You know that. You know you have to get drivers in the trucks. You know they have to get out on time, and you know all those different things. But when we do some of these negotiations, especially some of the new things, some of the new optimized things, and we try to see if folks have any idea how well their CSA is supposed to be performing, or how, let's just say how much money you're supposed to be making. No. So the question is, do you know how well your CSA is supposed to be performing? Right? Now, just so you know, and the FedEx Corporation's credit, when you get into these new situations, when you get into Network 2.0 negotiations, for the most part now all the time, definitely the optimized negotiations, that they're starting to show some of the cards, right? They're starting to show some of the things. They're showing things like a range of daily vehicles, maybe what your budgeted dispatches ought to be. They don't do this for regular current CSAs, but they're starting to show you a few things, what they would expect to happen in a particular CSA. but they're not gonna, and they never will. But there's not and never will be any type of expected financial results concerning individual CSAs communicated to you from FedEx. They're not going to tell you, oh, this CSA should make this amount of money, or this CSA should have these kind of margins, or anything like that, because it's up to you to run your particular CSA. Now, that doesn't mean we can't analyze and help you figure all this out. We can and do with something we're now calling the ETB pro forma budget and financial analysis. Some of you have already got these, have seen a few of these. That's good. I'm just wanting to go over this basically again to let you know what's going on here. So a pro forma budget is a report that projects a business's future financial health and performance by anticipating revenue inflows and fund outflows over a specific period, usually a fiscal year. It's based on assumptions about future expenses and revenues, as well as past expenses and revenues and the cost of company's plans for the year. So our pro forma budget starts with your latest negotiation while we're talking about it. Whether we helped you with it or not, the FedEx CSP estimated cost of operation assumptions are baked into your negotiation. I know you can't see that, but that's there. We won't tell you how we know, but suffice to say that thousands of negotiation consultations have given us the ability to uncover this critical information. Okay, so everything starts with your negotiation. Then when we go to do a pro forma budget, we can then project our financial performance based on FedEx assumptions for the current contract term. Okay. Then you can project your financial performance based on FedEx assumptions and the current term. What I just said, there are your operating expenses. So do you have any idea based on the characteristics of your CSA? Do you have any budget or expected cash outflow or spending a % of your revenue on this? I don't know if you can see in the things on the left there, your growth. What based on the characteristics of your CSA does FedEx think that you should be spending on wages and payroll taxes, let's say? Do you know, based on your negotiation, what FedEx thinks you should be spending on fuel, maintenance, insurance, all the other things, right? Remember, an operating expense are expenses that when you spend them, these things on the left contribute to the direct production of revenue. So you have to put a driver in the seat to generate revenue. You have to maintain the trucks that produces revenue. These are your expenses that are most variable and have the largest impact on your overall productivity. Now, because of that, they are the ones that you and your BCs should be paying most attention to, right? Your operating expenses. Okay. Most of the efforts managing these expenses can be termed revenue producing activities. So when you manage a driver's productivity, efficiency, work on the DRO, do something to contribute to the maintenance of the trucks, do something to, if rentals, whatever it is, those things those are revenue producing activities that you manage. It is these activities that the eTruckBiz Optimized Performance Program, which is a brand new program, and we'll talk about this later at the end if you're interested, will focus on and help guide you in becoming very proficient in managing. Okay. Now, there's another classification of expenses that FedEx expects you to spend your revenue on, and they're called general and administrative expenses. While these expenses are necessary, spending money on these does not directly influence the production of revenue. So for instance, you should have an accountant. When you pay the accountant, that's great, but it didn't produce any revenue. Except Ken's. He pays his accountant and oh, never mind. All right, these expenses are best suited to be farmed out to a third-party program such as the eTruckBiz Administrative Manager program. Doing so will rid your business of attention being spent on non-revenue producing activities in favor of attention spent on revenue producing activities. So bottom line here is the introduction of time definites into your operation makes it more complex, and there's actually more things to manage. So if you're trying to manage more with what you're already doing, that might not be a good idea. Be a better idea to have us, third party, handle some of the things that don't produce revenue. Okay. I think a lot of folks understand that. And then, so then after the percentage of revenue assumptions are made, we can apply your specific expected revenue projections to your pro forma budget. So we would come up with your operating estimates, your general and administrative estimates, and then finally you get to the bottom line. So what does FedEx expect your CSA to produce, right? So everybody's CSA is different. Each CSA, each negotiation, each area is different. But there are some general guidelines. So first, when you go through this exercise, or when we take you through this exercise, we would come up with a budgeted net profit, if that's what you want to call it, or a budgeted EBITDA. And in this particular case, it was 15.62% of revenue, or $237,000. Right? But that's before debt service. And now we're suspending a little bit of GAAP, generally accepted accounting principles here, but we're telling it like it is in this particular space. So you have your EBITDA, and then after your EBITDA, that's when you get into capital investment, or how much do I have to have around to service debt, or to service truck payments, or SBA loans, that kind of stuff. In this case, FedEx would expect or thinks you can tolerate, in this particular case, up to 8% of that revenue, so that at the end, you can come up with what's called the owner's benefit. This is what's left over after everything above. There is a way to figure this out, right? So, wouldn't it be great to know what the CSA is supposed to be yielding? This is what we've been doing now for several months, is figuring out ways to not only evaluate the CSA that you're operating, but as we said before, many of you will be offered other CSAs. We're seeing it, and words out there that before open CSAs get they get offered to, let's just say, the general public, they're going to try best they can to get open CSAs filled by current contractors, because again of the complexity of time definites, right? New person in the space isn't necessary. It's going to be hard. It's hard. You guys have all seen it before. That it's hard enough for folks to just take over a current CSA. Well, throw how tough it is to get the time definites done in there, and they're going to have a hard time. So anyways, it'd be good to know what those areas are supposed to yield before you get into them, wouldn't it? Well, now you can. So we just said there's eTruckBiz Financial Services. There's actually different kinds of analyses. You have just a budget, a pro forma budget for your current CSA. We can come up with some operating goals based on that for you. We can evaluate optimized CSA opportunities. There's sometimes they give you other types of analysis, or they give you different CSAs that you can compare to each other, sometimes 3 or 4 at a time. We've seen that. So there's all kinds of the different analyses out there. If you're interested in seeing the tools that CSPs are using to get the anticipated results, we already mentioned things, we already mentioned the Administrative Services Manager program. There's now also the Optimized Performance program. These are very helpful so that you and your BCs can focus on revenue producing activities. Remember that. And if you want to get, seems to be the hot thing out there, is getting the interactive BC checklist in order to get that stuff and get into more specific situations with your particular CSA, or maybe something you're looking at. Make a appointment with Becca at there's Becca's email address, so take that down. We're going to leave this up if there's any questions, or you can go to asm.eTruckBiz.com and schedule an appointment with Becca. I can tell you that the folks that have done this so far, it's been a very eye-opening experience. If nothing else, to take a look at your current CSA. What is it supposed to be doing? Right? That's a tough thing do you know? That's the question. Do you know? Do you know what it's supposed to be doing? All right, Ken, let's just see if you get any questions.
What having that budget is basically, that's structure for your company. It's goals that you have to hit. Normally financial targets are not optional. To coin ex-regional director, not an optional program. You gotta hit those, and then how do you hit those are your operational targets, engineering your work area properly, holding drivers accountable to the productivity rates, and all of that's included in that financial reports that we give you, but then you have to execute it. You have to have a certain number of stops per dispatch to hit your financial targets. And like I said, your financial targets determine the health of your company. So we do have a question that says, do you have different P&L breakdown per type of CSA, rural, city, or mixed? I think your P&L would be the same, but you have different budgetary amounts, and that's what the report that Jeff does. And you want to explain that, Jeff?
So, right, you have, again, each CSA has different characteristics. They're not, you do have mixed, rural, whatever. Yes, all that gets taken into account when we create a pro forma budget, if that's what we're looking at. So yeah, that does get taken into account.
Correct. Yeah, because as Jeff says, they're meant to produce different profit levels based off of mileage, stop density, stop mix is a big one as well, and that pro forma budget puts all that in there. P&L is a P&L. It's any
There's a
account gives you
difference.
P&L.
There's a difference between a pro forma budget, if you want to call it that, and a P&L. P&L is your actual results. So we actually have another way to take your P&L, which are your actual results, compare that to a pro forma, or what's supposed to happen. That would be a financial analysis, not necessarily just the pro forma, right? So what am I supposed to be doing versus what am I doing? And then you would use some of our programs to see if we can't fix it, if it needs fixing. Maybe you're doing better than the budget. That'd be great. But most folks don't, because they don't know where they're supposed to be. They don't know how many stops per dispatch do you need to make your budget, right? Do you know that? If you don't know that, then what are you doing?
And if you know it, do your managers know it? And do they have that number fixed in their head and understand the importance of hitting that goal? Because like I said, if you're not hitting that stops per dispatch goal, you're never going to hit your financial results. You can't save your way to profitability. You have to be productive and engineered properly to hit your financial targets. Okay. Matt, hopefully that did answer your question there. Like I said, I assure you guys that having that budget is your foundation. It's a starting block, and then from there you build your goals around it, and your engineering is built around your goals. So, and then you can adjust your engineering. Hey, we're beating our goals. Let's adjust my engineering, or I can produce more than 95 stops per driver day. Then we can adjust our financial goals. That's basically what FedEx does and UPS does. They adjust their earnings each quarter. You can do that in your business too. So, but operationally through the optimized performance program, basically we're going to tell you, we can help you do a quarterly P&D tune-up or at least a biannual P&D tune-up. But we think quarterly just because so much changes. As I talked about earlier, UPS introduced their surcharge. UPS will quickly match that or do what they're going to do in their thing with their thing. They do that to hopefully increase revenue and to match their cost. So if your costs are going to go up during peak or leading up to peak, where you've got training built in, yes, you're going to have some increased revenue. You're also going to have some increased cost. So, you can make adjustments to your budget. Looks like we got another chat here. It says, is FedEx expected to increase the revenue in the next round of negotiations in February of 2025? Is Carrie on, or Carrie want to answer kind of what we're seeing in the
well, yeah, we can't guarantee any raises of it, as far as that goes. But we are seeing increases, if you want to put it as a blanket statement across the country, because we do these all over. Some are optimized, some are not. So the majority of them are receiving some sort of an increase. Whether that will continue into next year is yet to be seen.
Yeah, and to temper that, the most increases is where we see people that have productive operations with their drivers on the road more than 7 hours, people that might not get much or even a slight haircut. Wouldn't you say, Carrie, are those that are around that 5-hour mark for their drivers on road?
That is correct.
So, question, how do the budgeted profitability numbers compare to previous years? Were they higher a few years ago, and post CapEx return of 7.6 seems too low to take on the risk of operating a FedEx ISP? Jeff, that's all you.
That assumes a debt load of 6 to 8%. So you don't have to. I mean, that's a you thing if that's what you want to do. If you want to, if you have to leverage it, if that's what the question is, how do a budget? No, they weren't necessarily higher a few years ago. They're pretty steady. The difference is, I don't know, and I don't want to start a whole thing here, but the difference is, have settlement increases, if you want to call it that, have they kept up with inflation? That's a good question. I don't think they have. I don't know if this question takes into account any kind of capital investment or debt service post CapEx. I'm guessing that's what that means. If 7.6, just because the budget is the budget doesn't mean you can't do better than that. You can. Many do.
And I think
something.
what you talked about, Jeff, the transparency that FedEx feels that they're giving in the optimized CSA packets. But even if it's not an optimized CSA, the negotiator will tell you how many budgeted dispatches per week that you have. And if you know what the weekly volume of that contract offer is, you can figure out what your stops per dispatch should be. And if you can't, I can definitely help you with that, and Carrie can definitely help you with that. So that is part of our a normal negotiation service. So that's important to know. You know, what do they think that your budgeted revenue, budgeted stops per dispatch, and budgeted revenue per dispatch should be? Okay. Doesn't look like there's any more questions. Carrie?
There's one more thing. The business is changing. I think if anybody's been on this webinar for the last year or two, however long we've been doing it, we've been trying to get this point across. Things are changing, and they're changing. Things are becoming more complicated. Okay, now, if you can hang with the program and get and do the time definites, folks are seeing better returns. Folks are seeing some actual light at the end of the tunnel. Did they plan it this way? I don't know. But it can be done. It's just, you can't, it's changing. I guess, I wonder if there's anybody on here in the panhandle that could tell you. I think if they are, they would easily tell. If you are, raise your hand in the I don't know how you do that in here, but raise your hand, you could tell us what's going on. I think there might be a couple. Let's see real fast here. They can tell you how things are changing.
And that change kind of goes back to that checklist that you can get for free. It's about hourly management rather than managing by the day. You know, it used to be fairly easy. Tell the driver, okay, you got 95 stops and 5 pickup stops. Go get that done by the end of the day. And if the driver got back at 2 o'clock, some people thought that was great. Personally, that's an underutilized asset, but that was great. Well, now things have to happen in this network 2.0 by certain times. Is it 10:30? Is it noon? And I can tell you, there's some optimized CSAs that won't have 10:30 deliveries in. Not sure why what FedEx's rationale behind it, but it's different. So that checklist will have you focused on a per hour basis and by certain times. That's the key to successful management in Network 2.0. How do I, rather than I'm managing by the day, I'm managing by the hour. And you can think of, I can manage my revenue by the hour. I can manage my cost by the hour as well too. So doesn't look like anybody raised their hand out there in the panhandle, but as Jeff said, big changes there. Carolinas are coming as well. And guess what's going to happen next January? A lot of changes for a lot of people. So it's good to have a budget now. It's going to be good to have a budget then. And then it's going to be good to have a partner that can help you handle those non-revenue producing events. And so you can focus on your operation, so you can start to change that culture from day management to hourly management. So will we be back here again next week? Cover some of the same topics as well as something new here. Please have a safe, profitable week. If we don't talk to you for next Tuesday, look forward to having everybody back. Thank you very much.